Hey folks, Dylan Bressie here from Grand Prairie City Council. I often see people confused about how property taxes work. So in this video, I'm going to explain property assessment and tax rates. If you haven't already, please first watch my last video. In it, I explain how council sets the overall budget which drives tax rates. A lot of people seem to think that the city budget is set based on taxes, that the city looks at all the properties in town, figures out how much it can collect from them, then figures out how to spend that money. But that's not how it works. It's actually the other way around. Instead, as I showed in the last video, council first looks at the needs of residents, businesses, and other community organizations. Based on these needs, council sets expected service levels for road maintenance, fire, police, parks, and other municipal programs. The costs of delivering these services are added up to form a budget. Then non-tax revenue sources are subtracted, and provincial property taxes are added to figure out the total tax requisition the city needs to make in order to serve its residents. This requisition is collected from all taxable properties in the city. But how do we figure out what share of it should be contributed by each property? That is laid out by provincial legislation and regulation. The city doesn't get to establish its own system of property tax. It has to work within a provincially created framework. Here's what that framework looks like. The first step is to appraise individual properties. Each property in the city is given an assessed value. There are a few different ways to determine a property's value, but for most residential properties, a sales comparison approach is used. This means that assessment staff look at all the property sales within the community to build a statistical model. Information about each property gets entered into this model to predict how much that property would sell for if it had been put on the open market. A super simplified example: say you own a 1980s bungalow across from an elementary school with no garage. The assessment model might say that 1980s bungalows of your size typically get sold for $280,000. But houses across from schools typically sell for 5% more than similar houses elsewhere. Your value increases. But, unlike most other 1980s bungalows, your house has no garage, and older houses with no garages typically sell for $10,000 less than houses with garages, so your value decreases. This means your house is assessed at $284,000. Is your brain full yet? That's a lot of information in a couple minutes. But the complicated part is done. The rest of the process is easier. Next, we find the city's total assessment base. That's done by adding up the value of every taxable property in the city to figure out their combined value. Then, we calculate a tax rate. We take the tax requisition needed to deliver municipal and provincial services, and we divide by the total tax base created by adding up the value of all the taxable properties. Out of that, we get a tax rate. Finally, the tax rate is applied. For every taxable property, its assessed value is multiplied by the tax rate to determine what it owes in taxes. Let's look at an example of how this works. To do that, let's return to Tinytown. If you watched my last video, you'll know that Tinytown is a community with just 5 houses and 1 community hall. To deliver municipal services, Tinytown requires $13,000 in property taxes. However, like all other municipalities, Tinytown is also required to collect substantial property taxes on behalf of the province. In this case, the province requires it to collect $4,000, so that puts its total tax requisition at $17,000. Assessment shows that most houses are worth $300,000, but the bigger ones are worth $400,000. Adding the value of all these houses together, Tinytown has an assessment base of $1,700,000. The tax requisition is divided by the assessment base, which gives Tinytown a tax rate of 0.01. When we multiply the $300,000 assessment of small houses by this tax rate, we see that they each owe $3,000 in taxes. And when we do the same math with the more expensive houses, we see they each have to pay $4,000 in taxes. Now, an important question. What happens to taxes if assessment values change? Do taxes change too? Not necessarily. But to find out more, you're going to have to watch my next video. In it, I'll walk us through a few different scenarios of how changing assessment values impact taxes. I hope you'll check it out. You can find that video and get more information about taxes at www.bressie.ca/taxes. And if you want to keep up with all the work of council, please follow me on Facebook. Once again, I'm Dylan Bressie. If you have any questions or thoughts about taxes or anything else council does, I'd love to hear from you. Thanks for watching.